Welcome back to the channel, where we focus on finding high-potential opportunities without needing a massive bankroll to get started. Today, we are diving into a segment of the market that many investors overlook because they are too busy chasing the magnificent seven at hundreds of dollars per share. We are talking about the best stocks to buy right now for under $15. While a low share price doesn't always mean a stock is cheap in terms of valuation, it does allow you to accumulate a significant number of shares, which can lead to explosive gains if the company's fundamentals catch up to its potential. In this video, we're moving beyond speculative penny stocks and focusing on companies with real revenue, established business models, and clear catalysts for growth as we head into 2026. One of the most prominent names in this price bracket is SoFi Technologies, ticker symbol SoFi. Currently trading in that sweet spot under $15, SoFi has transformed from a simple student loan refinancer into a massive digital banking powerhouse. What makes them so exciting right now is their recent achievement of consistent GAAP profitability. They've successfully diversified their revenue so they're no longer just dependent on interest rates or lending. Their financial services and technology platform segments are growing at an incredible clip. By cross-selling products like credit cards, insurance, and investment accounts to their millions of members, they are building a one-stop-shop ecosystem that is very hard for traditional banks to compete with. For an investor, getting in under $15 feels like catching a future banking giant while it's still in its awkward teenage growth phase. Next on the list is a legacy name that's making a massive modern pivot, Ford Motor Company. Ticker F. It might surprise some of you to see a blue-chip giant like Ford trading under $15, but that's exactly where the value lies. Ford is currently navigating the valley of death in the electric vehicle transition. While their EV division is still burning cash, their Ford Blue internal combustion segment and Ford Pro commercial business are absolute cash cows. They are using those billions in profits to fund the future of transportation. At this price point, you aren't just buying a car company. You're buying a massive dividend payer that is also a leader in software-defined vehicles and commercial fleet management. With a price-to-earnings ratio that looks incredibly cheap compared to the broader market, Ford is a classic value play with a high-tech kicker. For those interested in the future of aviation and urban mobility, Joby Aviation, ticker Joby, is a high-risk, high-reward play that currently sits under our $15 cap. Joby is a leader in the electric vertical takeoff and landing or eVTOL market. Think of them as the Tesla of the skies. While they aren't generating massive revenue yet, they are leading the pack in FAA certifications and have heavy-hitting partners like Toyota and Delta Airlines. A catalyst here is the approaching commercial launch. As they move from the testing phase to actually flying passengers in major cities, the market cap could swell significantly. This is a speculative moonshot play, but at under $15, it allows you to take a position in what could be the next major shift in how the world moves. Moving into the tech infrastructure space, we have to talk about Nokia, ticker NOK. Forget what you remember about their cell phones from 20 years ago. Today's Nokia is all about 5G, 6G, and global network infrastructure. Trading well under $10, Nokia is a cornerstone of the world's connectivity. As governments and telecom providers across the globe continue to upgrade their networks and move away from certain Chinese-made hardware, Nokia has become a primary beneficiary. They have a massive patent portfolio and a very healthy balance sheet. While it isn't a get-rich-quick stock, it offers incredible stability and a low entry point for a company that is essential to the functioning of the modern internet and mobile data. Finally, we have StoneCo, ticker STNE, a fintech leader in Brazil. If you want exposure to emerging markets without the volatility of some smaller names, StoneCo is a great choice. They provide financial technology solutions for small and medium-sized businesses in Latin America, a region that is seeing a massive shift from cash to digital payments. Backed by big names like Warren Buffett's Berkshire Hathaway in the past, StoneCo has navigated high inflation environments and come out stronger. Their revenue growth remains robust, and they are expanding their margins by offering more integrated services to their merchants. At a price under $15, you're getting a high-growth fintech company at a fraction of the valuation of its U.S. counterparts. Investing In stocks under $15 requires a specific mindset. You have to be okay with volatility and willing to do your own due diligence because these stocks often do not get the same daily news coverage as Apple or Amazon. However, the potential for a multi-bagger return where your investment doubles or triples is often much higher in this price range. Remember to never put all your eggs in one basket. A diversified approach is key when dealing with smaller cap or lower price names. Whether it's the Fintech disruption of SoFi, the industrial might of Ford, or the futuristic tech of Joby, these companies offer a way to grow your portfolio significantly without needing a fortune to start. Thank you so much for watching. If you found value in this breakdown, make sure to hit that like button and subscribe for more deep dives into the stocks that Wall Street might be ignoring. I'd love to hear from you in the comments which of these stocks under $15 is your favorite, or is there a hidden gem I missed? Always remember that investing involves risk, so stay disciplined and keep your eyes on the long-term prize. I'll see you in the next video as we continue to hunt for the best deals in the market.